Good morning, everyone. Welcome to the stock market update video, and we have a lot to talk about. So, stock market has been trending down for a month, and we'll be taking a look at where would be potentially the temporary bottom that we're getting a bounce or not soon, as well as we have earnings coming up next week, where Nvidia will likely dictate the directions of the semiconductor sector next week, and that would also dictate give us the fuel to QQQ because semiconductor sector is usually leads the way down or leads the way up, more volatile compared to QQQ. We also have ADI, who is also another semi stock, as well as MRVL over here. So it's a semi week with the retails as well, and we'll see how the earnings come in. And AI sentiment data shifted a lot more bearish this week after we've been having a month of downtrend, and we can see this has shifted up to 31%. So potentially we may get a bounce soon. So let's take a look at the charts. So today we'll be looking at both commodities and the 7 mega cap tech stocks as well. So we'll be looking at natural gas, gold, silver, and QQQ, Sp500, Nvidia, Tesla, Apple, Amazon, Google, Microsoft, and Meta. All right, and then if you guys want to jump to any of your tickers, I put the timestamps below. So just in the comments, just click the timestamps on YouTube, and it will jump directly to that ticker symbol. All right, let's get started with natural gas. So natural gas, on Wednesday, I talked about where potentially we may test the bottom of this megaphone. So this is a megaphone. You can see it's a most hated pattern that nobody likes because it's breaking both ways without any follow through. So this was a bear break, meaning we broke below the prior low with no follow through. So we bounced, and then did the same thing again. We broke below this low and lacking follow through. Bounced again, broke below that low, lacking follow through again. Same thing as the other side. We broke above without follow through. So it's a megaphone, just keeps on widening up. And nobody likes that. Bears don't like it. Bulls don't like it because it's going both ways, and nobody's really winning unless you're actually playing the actual megaphone, getting out, getting back in, getting out, which is very tiring. So currently we are at a strong level of support, which is 2.54. I talked about that on Wednesday, where if we do break this one, we're going to come back down here. I don't really see us breaking to the megaphone, but it's a potential, and we're pretty close to it. We're like, let's see, 6% away. But there is a stronger support down here, this one. This mirror looking line. You can see we have 3 touches here. So which also coincides with 2.46, which is another level of strong support on this one. See the balances, we have been bouncing off of it here, and when we were below it, it acts as resistance. So if we do come down here, let's say another 2 days, right? 1, 2, we pretty much coincides with this support as well as this 2.46 support at the same time. So the more support confluence in one area, the more likelihood it will bounce and will hold that level. Same thing as resistance. So I have a couple here. So this level needs to hold for the bulls if we break 2.54, this level first. All right, let's zoom into the hourly. So hourly is trying. Okay, so you guys know I talked about how the size of the bounce will determine the next move. So this 2.25% was a big enough bounce where bulls could try to shape up hourly trend change, because the bigger the bounce, bulls have more room to work with when we retrace. Meaning, let's say we retrace 50% and then we bounce, right? Versus this, like something like this, right? There's nothing to really work with. If we retrace just a little bit, we pretty much retrace the whole thing already. And so now we bounced here on the hourly, and you can see the bulls are trying to hold it to shape up the trend change here. So as long as the bulls break above this candle, 2.56, that's hourly trend change back to the bulls. So that's pretty much the first step we want to see for the bulls. And yeah, if the bulls can't do that, we're going lower, because if we can't even change the hourly trend back to the bulls' favor, bears are in absolute full control, because we are currently in a daily downtrend. confirming daily downtrend as well as a 4-hour downtrend, and in the weekly neutral trend. Yeah, so bears are currently in control. Even in the shorter time frame, hourly downtrend is still intact. So as long as that hourly trend is still intact on the downtrend, bears are absolutely in control. So what do you bulls want to see? Definitely on Monday, break above this candle's high, 2.56. And then the hourly trend is back to bull's favorite. It doesn't mean that we're going to shoot all the way up here just because we changed the hourly trend. But that's the first step of the bounce that's needed. And then we can start shaping up on other time frames like the 4 hours and the daily. So that would take obviously many days for trend to change shape up. But very first step, hourly trend change. All right, let's take a look at UNG. And UNG, same thing. Full bear control at the moment. Daily downtrend. If Natgas don't bounce, UNG obviously is not going to bounce. So we'll take a look at the hourly trend as well. It's shaping up as well. You can see similar. Their chart is pretty much correlated. So you can see this same candle bounced, and now the bulls tried to hold that level, and now we're getting very close to it. So that level is 6.99. So as long as we break 6.99, hourly trend is back to the bulls, and then we can start to look at shaping up to potentially go that 7.17 level. If bulls do shape up, that's hourly uptrend. Looking back at 2.61, sorry, 2.62 level, because it was, look how much cluster of volume traded in that area. So it's going to act as strong resistance when we come up to it. So we'll see. This one's not as valid anymore. We read a couple times, but it did bounce here. So this will also act as resistance when we come up to it as well. This downtrending line. Yeah, 2.62 and 2.66, and then we're looking at this 2.7 downtrending line for you bulls. There's 0.47 is going to be a hard one to break, but if you guys do break that, then you're looking down here at the megaphone and this 2.36 zone. And boil and cold is just 2x leverage for UNG, so it trades exactly as UNG. So UNG goes up 1%. Boil is the long side, so it'll go up 2%. Cold is the downside, so it'll go down 2% to the short side. So if UNG goes down 2%, this will go up 4%, depending on which side you want to play. But don't chart these two, bull and cold, because they're leverages. You never chart the leverage charts. You always chart the original charts. All right, and gold. Gold is still in absolute free fall and no signs of bounce yet. I talked about it on Wednesday where dollar is still very strong and we don't see a sign of a dollar stopping at the moment at all. So at least on Wednesday. But now, let me take a look. Let's see. Still no hourly trend change. You can see it's absolutely bear control. You can see there's no fake out on this entire downtrend. Bounce. The bounce is always going to be lower than the prior pivot. That means it's called a lower high, meaning the high is lower than the previous high. The high is lower than the previous high. The high is lower than the previous high. Same. That's why it's a trend. It's always lower than the previous high. So currently, the hourly trend, downtrend is still intact and zero signs of bounce yet. You can say the bulls are trying to shape up. If we do break above this, obviously it will be an hourly uptrend, but zero signs of that yet. You can see this could just roll over very easily because we already retraced pretty much 70% of this bounce, pretty close to the bottom already. So that's not favoring the bulls at all. Look at the dollar. No signs of slowing down yet. You could say maybe there is a, that's not what I want, rising wedge. A little bit of a rising wedge, so it might go up further and then decide if it wants to bear break or bull break. So at the moment, no signs of weakness on the dollar as of now. Even in the hourly trend, it's still in full bull control. So if dollar is going to be in full bull control, gold is going to continue to be weak, and so is silver and all the other metals. But silver is a little bit stronger, outperforming gold. It bounced off of its support and it's currently holding. So we'll see if it can be relatively stronger than KOLD. This 22.22 needs to hold. Otherwise, we're coming back down to 21.36. And if we're bouncing, we are looking at. So this is what gold bulls want to see. But like silver, big enough bounce. Now it's trying to shape up its hourly trend change. So if we do break above this candle right here, $23, then the hourly trend is back to bull's favor. Bull is currently like turning down here, so it's a lot weaker. Let's see, all right. Take a look at the stock market now. So QQQ broke out below my falling wedge, bearish, and pretty much is at bounce off of the support on Friday. So you can see this cluster of volume here, which coincides exactly with where we bounced off of on Friday. So are we back into bull's favor yet? As of now, no signs of that yet. You can see we're on the 4 hour. There's 0 fake outs. Every high is a lower high. You can see every high is a lower high at the moment. Every time we bounce. So what I want to see right now, we have a tiny first step on the bulls, right? On the hourly chart. So we held the bottom on today, bounced, right? And this was the retest where bears wanted to take it lower, but bulls bought it up. So that's pretty much the first sign that we are seeing from the bulls now. And when this candle broke above this one, it was the hourly trend change back to the bulls. But we need more follow through because we have not played offense yet. You can see we're still trading in this range. We need the bulls to play offense to move us back above this 360 zone, because we could have said the same thing over here, right? This move was a decent move, but bulls gave it all back. So we need to see the bulls playing offense here. So this is a initial, very initial sign of bull showing up. You can see over here, there's nothing, absolutely nothing, no bulls. Like you can see all these bounces are very small, right? We can say this is the very initial sign of bull showing up, but we're not out of the woods at all yet, because you can see the 4 hour trend. It's currently still in full bear control. You can say we're slightly oversold on the 4 hour, but that doesn't matter. 4 hour oversold bounces like this one over here. Let's see, we can have 4 hour oversold bounces and cool off and then go lower. So doesn't mean we oversold, we have to bounce that much. So 4 hour trend is going to be our guide. So we need a big enough bounce now, because the hourly is starting to shape up a little bit better looking. I want to see the bulls play offense for us to have a big enough 4 hour bounce, similar to this one. But now we want to hold the pivots and change the trend back to bulls' favor. And now we would say we can start shaping up the daily time frame lows, because if we do break this level of support, there is not a lot of support down here. You can see we came from this level to this level. It was just straight up, and there is lack of volume here, just like a Tesla, where it's breaking down in this zone as well, where it's just a straight up zone. So that's why this is the zone where pretty much bulls have to play defense. They need to defend this area. So that's why we saw them a little bit show up a little bit on Friday. Nothing like big or anything, but at least they played defense. But now they need to play offense to get us back to potentially here 364. it's going to be likely bulls first target. And then when we drop, we want to see a trend change back to the bulls. But let's see how much we have dropped so far. 8%, 8.4%. Yeah, still normal for bull markets. We drop 5 to 10% every year, even in the strongest bull markets. So that's now. Obviously, there's a lot more going on this year than other years with all the macro news and stuff, but just follow the trend. And because if you just did one thing this year, follow the daily uptrend, you would have just got in the summer, held it all the way here, got out because the daily trend changed to the downtrend, and now you're just holding for that whole move. We're still in a daily downtrend. And once you see the trend change, you just get out and you hold the next move up. Obviously, it's not that easy all the time, but a lot of times it is that easy for indexes. But most people get fake out because of their emotions and based on the news and stuff. So we'll just keep things simple and follow the trend. All right, let's take a look at SPY. SPY is also in a strong level of support because you can see if we do break this 431 low right here, then we're heading straight to this cluster next, where it's 430, 429 zone. So it makes sense for the bulls to play defense in this cluster of support. Otherwise, we're heading straight down to this one. If we do break that one, we're heading straight down to this one. So, I mean, it's actually, we have 3 days down, and then the 4th day is a gap down. That's a perfect time for buying a bounce play. 1, 2, 3, 4th day gap down is when it's a gap down. It's the best time to buy for a bounce play. And obviously, we don't expect us to, because everything's still in a downtrend. We're not going to expect us to just reshape up to. It can happen. Markets up 70% of the time, so I do play on the bull side technically. But same thing with QQQ. Bounce on the hourly. Now, bears try to bring it lower. Bulls play defense again. Bought it up. So that's a good sign. Initial sign of potentially a longer bounce, but as of now, we don't know that yet because we just have to go with what the chart tells us. So this is potentially shaping up for a bigger bounce than just one of these 4-hour downtrend bounces, small bounces. So we'll see if it actually shapes out on Monday. Monday is very key. We need the bulls to play defense. Offense on Monday for both QQ and SPY. Obviously, maybe Nvidia would give us a bump into its earnings, and maybe we'll see. All right, take a look at Nvidia. So this is what all the bulls want to see on their charts. See how what I talk about when there's a big enough bounce? We have such a big bounce. The pullbacks can be bought and played defense by the bulls and potentially shape up the trend. That is the difference between Nvidia's bounce versus QQ and SPY's bounce. There's so much room for Nvidia bulls to work with. Even they pull back 20%. Let's see. Even they pull back 8%. They're still higher than their lows, so they have room to play the bounce, right? So which is insane. You can see how huge this bounce was. 12%. So which is what they did. Nvidia bulls played defense here and bounce off of this 420 zone. Take a look on the hourly. Yep, pretty much an hourly V-shaped bounce from that 420 zone. Hasn't changed the trend yet because this is just a straight move. But this is what I talk about when there's a big enough bounce. Now, even if we pull back, bulls have a lot of room to shape up the hourly trend change back to their favor. And they do. We're likely looking back up to this 437. And we'll be looking back at this 450 zone. And after that, it's going to be its earnings on Wednesday. So we only have 3 days. So let's see, would we test? Yeah, we could. 3.5%. All right, Tesla. So Tesla, I talked about where if we do break this zone for 240, it's going to be super easy for the bears to take it down because of lack of volume here. And we're probably going to head down to this zone where you can see bounce, bounce, and bounce. Maybe we won't because QQQ might bounce actually on Monday. So if QQQ bounces on Monday, Tesla will likely bounce as well. And we're quite a little bit oversold. So on the daily, so they potentially Tesla may actually bounce in this level. This is one straight move. Trend has not changed yet. The hourly, so chances of it bouncing, I would say, is higher than it dropping on Monday, unless we get some bearish news, macro overall in the market. Otherwise, technical wise, QQQ should be bouncing on Monday and Tuesday. And we also came into close to top of this zone, so that zone would act as support as well. Because if I was a bear, I would be covering my shorts already, especially after such a significant drop, and with such a 1, 2, 3, 4-day drop. 4-day drop gap down is definitely a time to take profits if you are a short. I personally would definitely cover my whole position. There's not a lot of downsides left. Like maybe your target is over here, so but that's like another 1% away, right? So obviously, if you cover, comes down to here, bounces, and then it breaks, you can re-add it back, right? So there's not missing out that much. At the moment, I would say Tesla is due for a bounce, and reader bounce, we're likely coming back up. If the market bounces and it's starting to shape up a nice, strong forward trend change on QQQ back to the bulls, this could also V-shape as well pretty easily due to lack of volume down, lack of volume up, and lack of volume down. So if we do bounce and the market's strong, we can potentially come back to 233 with a nice fast move coming out back to this zone as well. So we will see. Yep, likely. And there's not much downside left. I'll be looking at this 210 and this teal looking uptrending support line. Otherwise, not much downside at the moment unless market bounces Monday and Tuesday, and then it continues to be weak again, right? We'll see how it shapes up on Monday and Tuesday after that. All right, Apple. Apple had a 7-day sideways range here, bear break, and not much follow through, I would say. It was a strong follow through on the day it broke. Next day after a gap, it was all bulls showed up. So it makes sense after such a significant drop. For Apple, 12% is pretty significant, and we're likely looking for a hourly trend change as well back to the bulls. So this is the gap down, and you can see after the open, bulls showed up. So this is one straight move. I want to see Apple go test 175 or 176, and then it's likely going to pull back because of the resistance, and then shape up the hourly trend change back to the bulls. So this 177 is going to be an even stronger resistance. So we'll see. We'll change the trend back to the hourly, and then we will test. And we're going to test 177 on the daily sometime soon, and we'll see if bulls can get back above that, because much of the volume traded here, they could potentially back a strong, really strong resistance back here. So 77 is definitely the key for the bulls. Bears probably going to be playing defense here. And I mean, I wouldn't be shorting Apple. Like, what's the point of shorting Apple? You can short Tesla if you get, right, 30% downside versus 12% downside, and then this is the stock where people just buy and hold forever. So, but yeah. So on the bull side, it's that 177 we're going to be testing. We'll see. Amazon, same thing. You can see 4-day red, and then you get the 4th-day gap down is all buying. That's something that doesn't occur that often. So when it happens, it's definitely a good opportunity for a bounce play, especially on these big names. Hence, we saw a lot of big techs bouncing after that gap down and potentially shaping up the trends. This trend is also hourly trend, did shape up, but same thing, lacking follow through with QQQ. So I want to see bulls play offense to shape up a proper hourly trend back to the bulls. You could say this is already shaped up an hourly uptrend, but lacking follow through for me. I want to see us break back above 134. And I'll be zooming out to the 4 hours to potentially look for the 4-hour trend. But the 12 EMA is still red. Our 12 EMA you can see is acting as resistance, rejecting here. So when we come back up to this level, 134, it's likely potentially going to be reject. And then the bulls do play defense, then we can potentially shape up the far uptrend after that initial slight rejection. That's what I want to see from the Amazon bulls. Because this 131 support, when I talked about it on Wednesday, I said that this is probably going to hold because how many times you have tested here as resistance. When you come down to here, it's definitely going to hold, bounce at least once first. So we got, and I want to see bulls play offense. All right, take a look at Google. Google, a bear break and slight. Take a look here. Very choppy, so it's kind of hard to see where the trend is. Top of the move, bottom of the move, made it higher. Double top, broke below it. You can say it's a downtrend daily. But yeah, let's just go for the hourly and see what it's shaping up like. So Google looks like it's the most weakest because it was a bear break on its trend and its support, long-term support zone that was holding. So after we broke through that right here in the morning, now it's shaping up a hourly bear flag. Okay, it's not a bear flag. It's the psychology of it. It's pretty much a bear flag measured from this part. It's the 4-hour bear flag, and yeah, it's a 4-hour bear flag. So we need the bulls to break above this 128 zone right there. You can see it's been rejecting because it was acting as support earlier. Now it's acting as resistance. See all the support back here on 128. And when we bounce, we can't get over it. That doesn't mean that it's game over for the bulls. QQQ goes strong on Monday, then this could potentially negate that 4-hour bear flag and this 128. And that means it's a bear break with lacking follow through. And we break about back the support. That'd be a good sign for the bulls. But big weakness again. This is gonna, that will be confirmed. A bear flag confirm and break. We're coming down this 125 and 126 level of support, which coincides with this prior structure. See all this structure here? So that's going to act as strong support when we do come down to it. There's actually not that much downside to even if we break this bear flag. Yeah, 1.3%. So we'll see. which way QQ decides. Microsoft. So Microsoft has been super weak ever since that AI news marking the top right here when it started to sell off. That was a bit of a red flag. Same thing with Apple. When you have good news and the market sells off after like a 5-4 months uptrend, then that could potentially mark the temporary top. And so as of now, Microsoft has 0 fake outs. You can see ever since it confirmed its daily downtrend, it's just been in a daily downtrend. Every bounce, it's a lower high, lower high, lower high, lower high, lower high, and it's been trending down the 12 EMA. What are we looking at now? Let's see. This 130, 111 was a zone where you can see acting as strong resistance. So if I was a bull, this is also where I would be adding as well. Because if this level breaks, there's nothing really down, right? There's nothing below us. That level breaks, where you have a waterfall down to this level, 134, and then to this level, 129, 191, which is not that likely unless we're looking for like a doom kind of day, you know, like market having a crash. So excuse me. So realistically, if we're not, you know, looking for lower probability plays, like where market's gonna just crash and Microsoft's gonna come down to 192, 291, then this is where bulls would be buying, right? Because this is gonna act as strong level of support after a 4-day drop, right? After a 4-day drop, we're not gonna expect another like 6-day drop kind of thing. So this 111 is acting as strong resistance power. It's going to act as strong support. So this is exactly where we bounce off. And now we want to see bulls play offense as well. So bulls play defense. Now we want to see some offense. This is one straight move in the hourly. So the next pullback, I want to see a bulls play offense and buy that up back above 318. Because if we can get back above 318, and we can potentially shape up a 4-hour uptrend. But as of now, no signs of that yet. Technically, I want to see us bounce to 323 and then pull back for the 4-hour trend to change, because that would definitely be big enough. Because we go up to 323 and then pull back to 318 and bounce here. The 4-hour trend change. That would be the most ideal scenario for the bulls, in my opinion. But we'll see how it shapes up. As of now, bulls playing defense. I want to see some offense. So overall, you guys can see all the big tech stocks are playing defense after 4 days of red. And this could be the very initial sign that the market may form a temporary bottom here. Overall, same thing with Meta. This is an hourly trend change. Bulls as well. You can see bulls are playing defense on all these names. So that's a good sign for Meta. Bulls, they held this 277 zone, which is bottom of this zone, but also the top of this zone. You can see we came down 274, which is the top of this zone, where we rejected multiple times and came straight. So this is a bear break. Came straight below it and then straight back out, back above this level. So that's a bear break lacking follow through. It's a good sign. So we have one sign, bear break lack follow through. Bulls, that's good. And we have a big enough bounce. And for the hour, big enough bounce and the hourly trend change back to the bulls. So that is a 3 signs that I can say that potentially maybe the temporary bottom on the daily time frame. But we need more work, because on the daily, it's just one small green candle on the daily, right? But on the hourly, we can say there's some small signs. We can potentially say this could potentially be the temporary bottom, where we may get a bigger bounce, and then we decide after that where market decides if it wants to be more weak or not, see if there's any macro coming up, news or not. But we can say technical wise, this is the level where most of these big tech names are going to have a big enough bounce, at least first initially, and then see if they can shape up technically wise better on the longer term timeframes on the daily. Because if we zoom out on the monthly, most of the charts are looking for a monthly higher low, meaning the pivot of the low is higher than the pivot low because of how much room there is to work with, right? So we don't want it to get too caught up in the smaller term timeframes, and potentially we'll see. For the bears, if they can shape up a weekly downtrend, that would change the whole picture for me in terms of long-term outlook, right? As of now, bears do have room to change that because of look at this drop, 15%, right? Next time we bounce, right, it's going to be very telling for me. If we do bounce, let's say 300, and then shape up a weekly downtrend, then we're likely shaping up more bearishness on the monthly charts. So weekly trend is going to be my guide. Obviously, we this week's coming on the bounce. It's going to be very telling. On the following week, it's going to be showing us if the bears can shape up a weekly downtrend or not. So next couple of weeks, it's going to be very key, and I'll definitely be updating you guys on that. And yeah, if you guys have any questions, feel free to comment below. And if you guys learned anything or made it this far, feel free to subscribe, and I will see you guys next week. And hopefully we get a bounce for the bulls, and for you bears, likely take some profit, and then get back in if the trend changes back to you guys' favor, right? So we will see. And then, yeah, I'll see you guys later.